Very good morning, everyone. Charles here, Firgnt Daily Chart Analysis, Sunday the 12th of July, 2026. Time is just approaching a couple minutes to 7 local time here in Milan. I hope you're all doing well. My charts are still untouched from the close of business on Friday, pretty much still untouched from post executing my last position, which would have been US dollar CAD short. I also took a GBP US dollar short prior London Open, which I believe I detailed in a breakdown video earlier on. On Friday, but nevertheless, I will go through a little bit of a breakdown regarding those positions taken on Friday. We'll go over the reasons why, particularly the confluence on the DXY, and I will then clear my charts and prepare for a potential, prepare for the potentials, I should say, for the week ahead. So let's get straight into that now for us. So what we had on Friday, we had a couple of scenarios, potential UJ shorts, US dollar CAD short, which I will select for you guys to have a look. And then we can look to compare that against the positions taken. So, of course, if we were just to go with the 15-minute time frame only, you can see how beautifully the trend is, making clear lower lows, lower highs, lower lows. So I was anticipating a potential lower high from the 15-minute time frame only, or going into more of the higher time frame directional setup, we would have to understand if price would look to gravitate slightly higher to a 15-minute order block that was still very much so available. But as I mentioned, that would have been a higher time frame directional trade with supporting confluence and bias from, of course, those higher time frame points of interest. So that's US dollar CAD. That was posted on Friday. And then, of course, GBP US dollar also posted on Friday morning. We don't have the hours, but you can see by how price had developed at the time, my anticipation for shorts. So I liked how price rejected that 4-hour order block bottom left-hand chart. You can see it's certainly a higher time frame directional position by way of beginning that analysis from that daily time frame, refining that daily time frame down. We can then see this 4-hour order block that really was giving me the confluence for the short as a result of price failing to break and close above that 4-hour order block. And often I've said a few times over that when price can be looking a little bit against your position in the immediacy based on higher time frame candles, based on the 4-hour candle, particularly when you're trading short or long, of course, out of a higher time frame order block, with previous 4-hour candles in this instance rejecting that order block, we then have, as a result of that rejection, or what that is could well be a subtle break of structure on the 15-minute time frame. And then when you go down to the 15-minute time frame to have a look what we have, you can see just ever so slightly in terms of this high created, this would have been the rejection of that 4-hour candle to the downside. And depending on how you view the market based on structure, usually what I'm saying is if structure is broken, then of course you do have a green light for a short position. What we then saw was price continue to move higher. However, this still was a nice confidence to take the short for me, because I was anticipating a further rejection of that 4-hour order block. And then when we were having this 4-hour candle in the latter stages of closing, my anticipation was, well, if we've seen rejection previously coming from that order block and prices now pushing up even higher, supported by that higher time frame directional daily order block, with reason to reject the daily order block as well, we have a lot of valid confluence simply on GBP US dollar as a standalone pair for reasons why we could look to go short. Also supporting that short position down, we had where price would look to want to gravitate towards those higher time frame 50 EMAs, particularly the daily and the 4-hour EMA, where price would be looking to gravitate back down towards to then support the internal structure that we see going on. So we see this higher high created, expecting a higher low perhaps for a higher high continuation. And the question that I'm asking myself is, okay, if you're anticipating there's a potential move to the downside to then create that high, which ordinarily I would always wish to be trading alongside structure on that 4 hour time frame and understanding either the bullishness or the bearishness of a particular pair on the higher time frames, then that's the position that I would really favor. So my long positions, in all honesty, I would be looking to take that position as a favored position. However, my anticipation was that, well, I'm at the charts, understood that London is not open. I quite understand as well that is not my usual trading time. However, when you see the position in front of you materialize, particularly when I was simply just doing my chart analysis a couple of hours earlier than I usually would, the trade was in front of me and I simply executed it without any reservations, and price didn't come back on GU, but we'll look into that just now. So just an example of what is posted when I'm looking to trade, as I've mentioned to those in Firgont Mastery already, that when I'm not able to have the time actively to break down my charts, I don't really feel comfortable sending the analysis out. So that's why you would have seen it's been quite quiet from me while I've been traveling over the last weeks, where I don't have the opportunity to really dive into the analysis. However, I have been actively trading the markets. So let's get to the charts. Close at the moment, of course, but we can still have a great opportunity to go through what I was viewing at the time and how I was looking to execute the position. So we'll start first and foremost with the DXY. And when I was looking to execute that short position, price was here. So as you can see, Asia is very much so still not closed, or rather said, London had not opened at that time. But what we were looking to understand is, well, do we have reason for price to want to push towards the upside from my short position on GU, giving me that DXY strength from a particular area for my GBP US dollar short to materialize? So at that time in the markets, we were down here, so no real reason on the higher time frames to look for a potential long move from that area other than a previous weekly wick imbalance to the downside. So if I put that back on the chart, just here we had a bit of a wick imbalance, and I always say wick imbalance always gives us good opportunity to understand why price may look to reject a particular position in the market, because for whatever reason price was failing to break and close below that area. In this instance, buyers stepped into the market from this particular position on the chart, and price was failing to break below. So when price was looking to gravitate back down towards that area, of course I'm looking for rejection. Now, not just by way of wick imbalance, I'm looking to have supporting evidence from that by way of the lower time frame. So this is the wick imbalance line or area that I've just placed on the chart, and we can see price didn't quite get there in the instance that I was looking to take the long position from. Also, no 4 hour order block to look to trade from. However, what we can do is revert to the 15-minute time frame only to understand whether or not there is a reason to understand, based on historical data, why price may want to continue pushing or at least rejecting a certain area. Don't forget the DXY. For me, it isn't the index that I'm trading actively at the moment. I figured if I simply chart the DXY up to the highest degree of professionalism that I'm using on all of my other pairs that I'm actively trading, just use it as a confluence. If I can understand where the DXY could potentially turn around from, I can then use that bullishness in this instance, or bearishness that I've used on the US dollar CAD, to take a position, and it's been very fruitful doing that. So what we can see, a 15-minute order block here, that's identified in by way of blue GAN box, and we can see quite clearly in the market, for me personally, that was a structure point, not the key structure point, because I couldn't be sure. But what I can understand is, for whatever reason on the chart, price is failing to break and close below a certain point on the chart. Therefore, if price is looking to want to gravitate back down towards that area, there is a very high probability that price may want to look to reject it. In my initial thoughts was that, well, when I'm seeing double, triple bottoms, that liquidity could be attacked towards the downside, giving light to this area in the chart. So I was a little bit hesitant, particularly because it wasn't the start of my usual trading time as well. However, price came into that 15-minute order block beautifully, and as you can see, rejected it. What I then did was go down to the active pair that I was trading, which would have been GBP US dollar, and understand what was going to go on the lower time frames. As we've already mentioned, this 4-hour order block rejected nicely. We were having the understanding and impression that the next 4-hour order block would also look to reject it. What I love in that instance is that above that 4-hour order block, we had another 4-hour order block that price tapped in beautifully, and then what we can see is that rejection to the downside based on the 15-minute time frame. 15-minute time frame, we had the refined area on, so that's not showing, is it? It is. This one isn't showing. That's the one. There we go. So rejection of the initial 4-hour order block. So that's the first confluence. We had another, in fact that is a 15-minute order block. Almost confused myself there. 15-minute order block right up at the highs. Let's get that changed. A lot better. So refined of that 4-hour order block, but slightly above it was this 15-minute order block that price came into beautifully, gave us a rejection by way of lower time frame break of structure as well. And then when price came back, I would look to execute that position instantaneously. So what we can see here with all these wicks thrown to the downside, that simply is that lower time frame, very intricate break of structure on the 1-minute time frame. And then what I did was simply use a 5-minute order block to support that short position down by way of, I can show you just now, if we scroll back. So high created in the market. As I always begin to say, one line will do it. Break of structure. Here's an illustration for you as well. Couldn't be confirmed that here is a higher low. However, after this higher low confirmed by that higher high, break of structure, order block selection, look how price has now developed. Even by the point that price hadn't been executed in the short, even just look at that. So we had a high, higher low, higher high, break of structure, imbalance by way of 5-minute, and then price came beautifully back into that imbalance area, and price just continued to roll down to the downside. With the DXY, then in the same instance, we can see when price came back into an area, pretty much the same. Price came into an area that gave us a very subtle low in the market. Therefore, here would have been the lower high as a result of being confirmed, lower low, break, pull back, and off we go. So we had a great degree of confluence across the chart, and if we were to put this line slightly lower, you can understand. There is the intricate price action on the 5-minute time frame. However, I was looking at just the area on the DXY, and in fact I was on the 1-minute time frame here on the DXY, not so much the 5, using that as a confluence, but the 5 also makes sense, and that's how we look to execute that short position there on GBP US dollar. Price didn't return, unfortunately. I was looking to re-enter that position. However, price didn't quite break those significant structure points to the downside, and what I did have was a very conservative take profit at Asia lows to understand, well, I could be quite lucky. Price could, of course, continue to roll to the downside, but my anticipation would be, as I would anticipate market always, when I'm getting to the charts just before London open, my anticipation would be, okay, well, price has moved off from an area. I'm expecting price to return back before looking for that continuation for the rest of the day. Therefore, I closed positions out perfectly, just as Asia had closed, London had opened, and of course you see that we had the continuation for the rest of the day after the pullback. So that's GBP US dollar discussed. We'll move on to the other pairs that I was speculating across the day. So UJ, still untouched for the day. I was expecting UJ to have a bit more of a pullback, in all honesty, before looking to execute a short position. As we can see here, no positions were taken. We still have the alert very much so available up at the highs, and I still think going into next week that could be a nice looking position as a result of that continued rejection on the weekly time frame. It looks really, really, really nice. We've had that bearish engulfing candle on the daily, giving us a bearish daily order block, and we're up at those highs. That's what I was expecting price to gravitate back up towards, for us to have that continuation based on the lower time frames, and also based on the daily 4-hour time frame as well, supported by that wick imbalance and the wick rejection of that weekly time frame. So a little bit of an insight. UJ going into next week still very much so bearish at this time. So a nice trade that I look to have taken, also US dollar CAD. Really happy to see that materialize, because I love the fact that I'm trading two separate strategies in one. I have my higher time frame directional trades. I also have my Asia type of positions as well. They are based on the 50-minute chart only, and as well as that, of course, I can rely simply on the 50-minute time frame. Even if Asia has already been filled, I have that break below Asia pullback, hopefully into a 50-minute valid point of interest before looking to take the short position. So trading pretty much, I'd say, 2.5 types of strategies. Asia range being a standalone, it's a very simple concept. I wouldn't really call it a strategy as such, it's just a concept. And then the 50-minute time frame only is definitely more so of a strategy, if you're able to rely upon your 50-minute time frame analysis based on confluence across all of the other pairs. So US dollar CAD, that was taken, of course, you can see in London, and what we have is reasons for the short position based on all time frames. So if we have a look at this now, weekly time frame, no real reason to gain access to a short position, but what I do like is the daily time frame. If we zoom out, bottom right hand chart, you can see how price was now gravitating in, or rather out of, or expecting to have the short move out of that higher time frame daily order block. Why? Well, it's the most recent order block that's available that has caused price to move towards the downside. Therefore, if it's available, as you can see, there are no other daily order blocks that are available, i.e. that haven't been mitigated, aside from this daily order block just here. Then we move across, price has tapped into it a couple of times, but never got into the highs of the order block. And I love when price returns into the highs of a daily order block, or any higher time frame order block, because that gives us the better option, i.e. we are at the highs, meaning that I don't really have any better areas to look to short from, because we're already up at the highs. Now, if we're seeing price move out of the area and pull back, then we'd be looking to take a short position. However, price has now developed ever so slightly away from that daily order block, meaning that the 50-minute time frame becomes a little bit more attractive, because we have a beautiful 15-minute trend towards the downside. You can see illustrated in that red illustration on the arrows. So I had two trails of thoughts. Potentially price going to come back up to this 15-minute order block for an easy Asia range fill. As you can see, that was my target. Or alternatively, we could roll slightly higher for that higher time frame directional short position down to the downside. As you can see, a beautiful Asia range position taken, more so over here, if I should be a little bit more accurate. So we had Asia printing, or rather Asia had closed. The last area in Asia where we can see that high being created was from this area just here, and then as a result of that break of structure, break of Asia structure, we've then had price, or London, show its hand. We saw London break structures, pull back, and then a very simple short position down to fill Asia. And that's all it was, I'll be quite honest. So a nice 10 pip stop loss we had there. Let me get that accurate for you guys. And then we had our take profit down by Asia for a nice 3%. And that pretty much completed the day. We're very satisfied with a bit of a lucky trade. Well, it's not lucky. You have to be in the market to win. GBP US dollar short. We banked roughly 3% on that trade as well, 3.6%. And then we had a 3.2% on US dollar CAD as well. So a nice fruitful day for ending the week, supported by the fact that these charts were all posted in the morning for you guys all to have a good look. So I'll end the video there. AUD US dollar wasn't taken, unfortunately. No real area for me to look for. And Gbpcad, no position there either. So I'll leave it there before my time expires. I'll be looking to refresh my charts now, and then you'll be seeing some daily chart analysis being posted for the week ahead in terms of my anticipation based on my higher time frames. Do take care. All the very best in your trading journey. Charles.